Hi, this is Tony Turner, and welcome to the Market Now as of the market's close on Friday, September the 12th. U.S. stocks fell today, and energy shares extended their recent slide, while rising bond yields drove down high dividend-paying shares. Solid U.S. retail sales and consumer sentiment data issued today added to concerns that the Federal Reserve could raise interest rates sooner than some have expected. The Fed will hold a two-day policy meeting next week. At its conclusion on Wednesday afternoon, some economists expect the central bank may change the wording of its policy statement to take on a more hawkish tone. Major indexes finished lower after 5 straight weeks of gains. For the week, the Dow was down 0.9%. The S&P 500 was down 1.1%, and the NASDAQ was down 0.3%. Now let's look at 3 charts that could give us an insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of the S&P 500 SPDR, the SPY. As you all know, this is the tracking stock or ETF that closely follows our S&P 500 index. Now, we saw a new all-time closing high on the SPY last week at $201.19. Of course, that was over $2,000 for the S&P 500 itself. And that's after bouncing from recent lows down around $191 that took place back in August. We can see support here, near-term support at $199. We can see support at 197, price support and moving average support currently from the green line, the 50-day moving average at, again, at 197. And we can see more support at the bottom of this consolidation down around 195. So we have lots of support, potential support here on the SPY should it head lower. What we do want to do here is just take note, though, that the RSI is definitely rolled over. The 14-day RSI is definitely rolled over and headed lower. Not cause for alarm, but something we want to keep an eye on. Also, the MACD, the Moving Average Convergence Divergence Oscillator, MACD line has moved very, very slightly below its MACD signal line. Now, as I mentioned a few minutes ago, all eyes will be on the FOMC interest rate announcement next week, which will take place on Wednesday about 2 p.m. That's when the announcement will come out. Now, think of it this way. If interest rates, and they have popped over this last week, if interest rates rise, it means it costs more for companies to borrow money. Now, on the back of those rising rates, we have seen a rising U.S. dollar. That's also taking place right now. A rising U.S. dollar means that U.S. products cost more overseas. So, next week's Fed announcement, or this coming week's Fed announcement, will probably sway the SPY. Could be lower if if a rate increase is imminent. SPY could go higher if that is not going to be the case. We also, however, need to keep in mind that this coming Friday is options expiration. That can also add to market volatility. In short, I am going to remain cautious this coming week, very cautious with my trades, and keep my stops in place. Our next chart today is a daily chart of the PowerShares QQQ. As you all know, this is the tracking stock that closely follows the NASDAQ 100. Now, the daily Qs made an intraday high this Tuesday, relative high, I should say, at $100.46. Of course, the all-time high was back in March of 2000 at $120 and change. Right now, and the Qs have done a fantastic job of staying aloft this week. They're right now resting right on top of their 20-day moving average with a very nice trend line coming up and going up right along with the green line, the 50-day moving average. Of course, the 200-day is below. What we see here is the Qs, they are moving sideways. The RSI here is moving down. The RSI is not impressed at all with the Q's ability to remain higher. Again, it's not a cause for panic, but it's a bearish divergence and something we ought to keep at our elbow. The MACD line here, you may not be able to see, has fallen slightly below its signal line. Several industry groups in the tech sector have done very, very well lately, such as social media, the internet, and disk drives. Semiconductors have also had a very nice recent upswing. One thing we could note is while the Qs were moving higher, their candles got more and more narrow. Now, of course, with a little more volume coming back into the market and the bulls and the bears starting to argue as to whether this is the place to buy or sell, we can see these candles getting a little more volatile every single day. I'm going to add those things in my list of reasons to be cautious next week. Our final chart today is a chart of the PowerShares Dynamic Media Portfolio, symbol PBS. We've looked at this before. The top holdings in this ETF are Twitter, Time Warner Cable, Facebook and Dish Network, and Netflix. Now, this ETF has been consolidating for some time now. I have noted that just yesterday, the 20-day moving average, the red line, just crossed above the 50-day moving average, the green line, and the PBS actually broke a little higher today, although it ended slightly down on the day. Underneath, of course, we have the 200-day moving average and a very nice trend line gently moving higher. Many indexes are either overbought here or in a downward mode. The media portfolio, however, looks like at least it's holding its own. As long as it can stay above the 20 and 50-day moving average, and especially above the 200-day moving average, I'm going to say as long as it remains above 25, I'll be interested in watching it. It closed today at 25.51. If this market indeed does move higher in the coming weeks, I will look at the PBS to see if it can break above 25.75, perhaps break above this consolidation with nearby resistance overhead at about $25.80. If it can break above that, if the market continues higher in coming weeks, potentially the PBS could move higher up past 26, 26.50, and perhaps even into the $27 zone. So I'm just going to keep an eye on that. This ETF does not really have enough shares in it to day trade. It's something, if you believe media will go higher, that you'd want to buy and hold for the longer term, probably with a trailing stop in place. Now we'll go on to next week's economic reports. Monday, we have the Empire Manufacturing Index. Tuesday, the Producer Price Index. Wednesday, we have the Consumer Price Index, crude inventories, and the FOMC rate decision at 2 p.m. Thursday, we have jobless claims, housing starts, and building permits, and the Philly Fed. Until next week, keep green on your screen. I'm Tony Turner, and this is The Market Now.